So sell everything and buy Alibaba stock right now is a tweet I read on Twitter a couple of days ago, and I thought this guy's an absolute lunatic, but he does have a point as I dived a little bit deeper. In this video, we're going to look at Alibaba stock. Is it a buy? Is it a sell? Of course, there is a lot of risk with this company, being that it is a Chinese company, but I think there is a lot of upside potential as well. I think if you time it and play it right, there's a lot of upside in Alibaba, and I'm going to be covering that in this video. And speaking of covering, you need to run to the fridge, pick up some butter, cover your full face in it, because we are about to embark on a big journey to make sure Alibaba gets its second ever STI. Now look, if you are new here, the STI series, the stock ticker inspection, is where we get down and dirty and give a company a sexually transmitted, no, I'm joking, we give a company a full thorough look through and see if it's worth buying. Now recently I did do a video on Alibaba, I'm going to link that up there. Hopefully I'm pointing to the right place and you can go and check that out. Now since then, a lot has changed. So let's get the negative news out the way. China, the communists. The Chinese government does not like losing power. I mean, really, no government or company likes losing power too. But China, one of the fastest growing economies in the world, said to soon one day rival the US for that #1 spot, just cannot help themselves in terms of hurting Chinese companies, especially if you look at their stock price alone. The communist Chinese government came out recently and said that they are going to clamp down on private education. There's talk of regulation coming in, and it's very clear that they are not happy with Chinese companies raising money abroad. And to be honest, without getting into politics too much, I think that's a little bit of a smokescreen. I don't buy it. I think the Chinese government is really scared about losing control. They see what's happening in the US with big tech having influences on everyday people, everyday lives, what they buy, what they sell, and also even in politics. And I think that as Alibaba grows and social media grows, the Chinese Communist government are really scared that the people will sort of group together on these social media sites. And if you don't think that's possibilities, just look at some of the biggest riots or some of the biggest sort of gatherings we've seen. They've all come from social media platforms and gatherings and groups. And I think the Chinese government is really scared that this could happen with big China tech. I don't want to get into the Chinese government. I don't know if they're good. I don't know if they're bad. I have no opinion on it. To be clear, do not demonetize me. I don't live there. That's just my personal opinion. I don't see it as the Chinese government doing this to help their own people. I see it more as them helping themselves. Now, because of all this uncertainty, the Chinese stocks that are listed in the US have been absolutely tanking, and Alibaba is no exception. As we know, fear and uncertainty are the biggest drivers to the downside for anything really in the stock market. This fear and uncertainty has seen investors like Cathie Wood, who invest into growth stocks and growth companies and disruptive tech. Well, actually, Cathie's been selling out of her Chinese stocks and lowering exposure there. So it's got some big players really fearful and really scared. But to be honest, it does make sense. If you're uncertain and you run a hedge fund and you're looking after other people's money and you don't really know how this is going to play out in the short term, why take the risk? And you know what else makes sense? Is why don't you go ahead and smash that like button for the YouTube algorithm? But coming back to it, if you're following my public portfolio on eToro, the Coffee to 100K challenge, there's a link for that up there. Again, hopefully I'm pointing to the right place. You can go and see that I am increasing my exposure to China. I'm doing the opposite of what Cathie Wood does, and that's not because I see myself as a better investor than her. I just see myself as somebody who thinks this sector is going to do well in the long run, and I'm quite happy that I'm gaining it at a discount. And again, I'll cover that in this video. And speaking of eToro, if you do want to join eToro, do it via the link on the pinned comment, deposit, make a trade, and you get lifetime access to the LWT chat room. But I do think if you're careful with picking your Chinese stocks and you pick big companies, not low cap companies or higher risk, then I think you'll be good in the long run. And let's have a little look at Alibaba to prove this point. Alibaba's current market cap is around about $532 billion US. And if we look at Simply Wall Street, they think they are 27% undervalued. Their price to earnings ratio is 22, which is not that bad given the growth of the company, and their PEG ratio is quite decent in my opinion at 2.3. Their financial health is amazing. Their short-term assets and liabilities are way covered, and to prove that, recently they got fined a record $2.8 billion US, in which Alibaba basically said, well, thank you, and paid it just out of their basically petty cash. Imagine having $2.8 billion just sat on account. Their debt to equity ratio is really good as well at 15, which I think is absolutely fantastic. And if we look at tip ranks, and again, there's an affiliate link for that down in the description, we can see that out of the top analysts on tip ranks, 16 analysts all think it's a buy, and the average 12-month price target, if we clump them all together, is $296, which represents a 51% upside in the next 12 months if these analysts are right. And again, analysts are wrong as much as they're right, so don't just go on that alone. Now, this is where it gets interesting. Let's look at the operating revenues of Alibaba. If we go from 2017, the end of the first quarter, to now, so basically it's a 12-month trail, we can see that their revenues have gone from 24 billion to a whopping 110 billion in 5 years. Now, that is some phenomenal growth for one company. Like, seriously, that is a hell of a jump. But you're probably thinking, okay, but what's their net income? Because we've seen companies like DraftKings have same income revenues, but their net profits and stuff is actually a lot worse because they're blowing money on advertising. Well, Alibaba's net revenue is 6 billion to 23 billion US dollars in terms of net income in this 5-year period as well, which is absolutely staggering. Now, the big thing, will they continue this crazy growth? Well, for me personally, I'm obviously going to say yes because I'm invested in this stock. So you need to do your own due diligence because this obviously isn't financial advice. I'm just a bloke with a beard on the internet who really likes Alibaba. But obviously the big worry here is the Chinese regulations and clamping down. They don't like companies having a monopoly, and it's quite understandable because Alibaba owns a hell of a lot of companies. This is not just an e-commerce company anymore. They have AI, they have tech, they have payment systems. This is an absolute technology mega giant, and I think it will continue to grow. And I think the Chinese government have got really concerned that they are basically buying up competitors, new industries as time goes on, because they have so much cash on account, they can just go and buy a big shareholder of Snapchat. And yes, they did buy a big stake in Snapchat. And I still don't understand why do people even use Snapchat anymore. But I also think one of the biggest things is it's a matter of time. It might be 5 years, it might be 25 years before Alibaba breaks more into the West. After all, this is the second biggest e-commerce company in the world behind Amazon. And they are growing fast. I mean, Amazon's growing fast as well, and I'll talk about that in a second. But I do feel it's a matter of time before they break into the Americas more. I mean, AliExpress is becoming massively popular now in Europe, and people are buying it more and more. The biggest problem they have right now is customs. If we can think of a way to get around that, and I'm sure they're working on it, then I think this company will literally explode. Now, again, I want to stress this is the second biggest e-commerce company in the world behind Amazon, and they are growing fast. Will they catch Amazon? Well, that's quite a bit of a stretch. I don't really think so. But these two mega giants are definitely not just e-commerce companies anymore. They're leaders in cloud computing, AI, and the list goes on. I see these companies literally sort of being rivals to each other, but I do honestly see Alibaba never catching Amazon unless they really mess up somehow. But nonetheless, I think these companies will grow massively in the next 5-10 years. Now, Amazon, you could argue, is already overpriced. And I know that might sound crazy because Amazon probably will go up in the current market. But Amazon, if you just look at their 5-year chart, over the 5-year chart, which we talked about their revenues, Amazon is up a massive 390%. If we look at Alibaba over the same time, and again, we're working off percentages here, not in terms of revenue, not in terms of stock price, just simply percentages alone. Alibaba is up 130%. Now, these companies are growing at crazy rates. They're in very similar sectors and both in massive economies. Why is Alibaba only up 130 if Amazon's up 390? And I know there's many reasons for that. Don't freak out in the comments because Amazon is in the US. They don't have this whole Chinese problem going on right now as an example. But my opinion and my thoughts is Alibaba right now just looks like a better buy. If you're going to buy one of them, Alibaba just looks like better value if you just went on that alone. Now, the Chinese regulation is a massive concern, but the way I see it, there's two worst case scenarios. One is they get delisted, and who knows what's going to happen to people's shares then if they get delisted. There'll probably be some sort of share buyback and investors will get back a certain amount of money, but if that is rumored to happen, their share price will absolutely crash to the ground, and your shares will probably be pretty much nothing anyway. Now, the second big problem is regulation comes in and China steps in and starts breaking up Alibaba into little sectors. But again, I don't know if that would be massively a bad thing. I mean, in the short term, yes, but in the long term, at the end of the day, all these revenues are still probably going to go up one way to the main company itself. The way I see it is the Chinese government are just doing a little bit of a flex, showing off their power and saying to these companies that, look, you need to clear everything with us and then we're all good. I mean, realistically, the Chinese government just made $2.8 billion US from Amazon, and if they broke up this company, then they can't raise that money anywhere, and who knows where this $2.8 billion went anyway. But I do think they'll want to keep companies like Alibaba and JD operating in the US because it's a way of bringing US investors into China, using that money for other side, and they can always just find one of these companies $2.8 billion US, and the companies are just like this. So the Chinese government, it's a way of them of raising money without having to raise taxes. Everyone wins, and that's my thoughts and thesis. Now, I did do a bit of an intrinsic calculation here, and I want to be very clear that I will not disclose this whole calculation, and there's a reason for it, and if you're in the WhatsApp group, you probably know the reason why. But these are my 5-year predictions, and I rarely share this with you. So if you made it this far in the video, congratulations. Drop the code word down below, baby Amazon. My intrinsic calculations for 5 years' time. This is not in 12 months. This is a 5-year plan. I see my low estimation for Alibaba being, drum roll please, a whopping $289.10 US, which would represent a 47% increase. My medium intrinsic value calculation, which is sort of the medium risk and one I'd probably more go off, would be $298.9 US in 5 years' time, which would represent a 52% increase from its current price. And my high, my crazy estimation, which is not that crazy really, if I'm being honest with you, given the market and how hype stocks are, well, doing thousands of percent these days, my Alibaba estimation on the high end is 322.56, which would warrant a 64% growth in 5 years. Now, these are quite conservative figures. They may not look it, but I do think Alibaba is good value, and if they continue the growth, we get over this whole Chinese regulation, I think that is my values and that is my price targets, and that's where I think they will go, unless something else crazy comes out, in which case I need to do my calculations again. Do not go on this alone. Do your own valuations, do your own calculations. This is just my personal opinion, and I'm really reluctant to share this. It might not even make it into the video. But to clarify these calculations, if they do make it in the video, the low estimation represents a 25% year-on-year revenue growth, a 30% revenue year-on-year growth for the medium, and a 35% year-on-year growth for the high estimation. And to be clear, the 5-year average for Alibaba is 45% year-on-year growth as an average over the last 5 years. So I'm even being slightly conservative that they can keep this up. So I've sort of gone down a few tiers there. But I do expect short term this to be a very bumpy ride. I expect it to be more bumpy than the chin of a pubescent teenager. But long term, I do think fundamentals and facts will catch up, and this company should see some decent upside. Let me know your price predictions for 5 years down below in the comments. Make sure that like button is turned blue. Love you all. See you soon. Peace.